Assalamualaikum warahmatullahi wabarakatuh. So, we as a legal advisor and Badrul Colleges, we need to convince Ali Abu Ammar, the owner of Abu Partnership Enterprise, that they should change their partnership business to the company. Abu Partnership Enterprise has been operated for 10 years. They have potential in growing, high development, and receive a good response from their client. So, let's get started with knowing about company more details. First and foremost, based on Companies Act 2016, there are three classifications of companies, which are company limited by shares, company limited by guarantee, and unlimited company. So company limited by share is a company that limit of its shareholder to the amount. Next, company limited by guarantee is one in which its members' liability is limited to the amount that members respectively undertake to contribute to the asset of the company, like foundation and institute. Company limited by share and company limited by guarantee has some similarity where they have the word berhad as part at the end of its name. So lastly, unlimited liability company. Unlimited liability company is when there is no limit placed at the member's liability. A private unlimited company will have sendirian berhad. Meanwhile, an unlimited company will not have berhad after its name.
Assalamualaikum warahmatullahi wabarakatuh. My name is Afif. Today I'm going to explain to you two things, which is types of company and also registration requirement based on CCM. I will explain to you one by one. So, for the first one, types of company, we have 5 types of company, which is public company, private company, exempt private company, foreign company, and last but not least, government limited company, which is GLC. So I will go through one by one. First company is public company. For public company, you need to have a word berhad at the end of your company name. And this type of company, it can either be limited by shares or guarantee. And as far as I know, there is no maximum number of members in this company. Since the name is public company, so this is the only type of company where you can offer your share or debentures to public. Now moving on to the next company, which is private company. For the private company, you need to have a word sendirian berhad at the end of your company name. So this company can limit, the liability is limited by shares. For the number of members, it can only reach 50% only. Since the name is private company, since the name is private company, you cannot offer your share or debentures to public, or also you cannot make invitation to public so they deposit the money to your company. Next is exempt private company. For the exempt private company, the maximum number of member can only reach 20% only. And for this type of company, you doesn't need to file any account to CCM, but what you need to file is certificate signed by director, secretary, auditor, stating that the company is able to meet the liability when the time for due. Now, second last company, which is foreign company. Foreign company is a company where it is incorporated outside from our country, which is Malaysia. Or other definition is unincorporated association where that can sue or be sued, that hold property under the law of its place and doesn't have any head office in our country, which is Malaysia. That's all about foreign company. Now, last company, which is government limited company or GLC. GLC is a corporate entities where our government, Malaysia government, have a part of a share from the company. This type of company, it can either be public or private. So usually GLC, the business focus on specific firm for the purpose of the focus on specific firm is to boost our economic activities, our nation economic activities. For example, Post Malaysia, TNB, Telecom, Petronas, Maybank, and so on. Now moving on to the next chapter, which is registration requirement based on CCM. But first, what is CCM? CCM is what we call it as Companies Commission of Malaysia, CCM, or in Malaysian we call it Suruhanjaya Syarikat Malaysia. But what is definition of CCM is statutory body that regulates rule or business and companies affair in Malaysia. That is CCM. So what you need to have when you want to register as a company based on CCM is you need to have the name of your company, status of your company, whether is it public or private, or registered office, nature of your business, number of share, number of shareholder, and the number of member, and other basic information just like name, identification, nationality, and address of each director. That's all for me. Next person will take over our group presentation is Ammar Arif. Thank you very much. Thank you for listening.
Assalamualaikum warahmatullahi wabarakatuh. My name is Muhammad Ammar Arif bin Zazali. So today I want to talk about financial reporting requirement based on Companies Act 2016 and the Financial Reporting Act 1997. There are three main parts of financial reporting requirements, which are accounting and others record, financial statements, and directors report. So for the first is for the accounting and order records, Companies Act 2016 state that Section 243 to Section 251 Act covers matters pertaining to the preparation and the presentation of financial statement. Next, it need to be prepared and present in accordance with all approved financial reporting standard based on Financial Reporting Act 1997. So the characteristics of the financial statements are governed by statutory and other regulatory pronouncement every company and its directors and managers. Its director and manager shall cause to be kept such accounting and other record. Not only that, all transactions should be recorded within 16 days of occurrence of the transaction, and company should retain the record for 7 years. Next is maintain other important books and register. So from that, we need to keep our company important record book. It is because it helps us to manage our company and shows our company grow. So for that's all for the accounting and other records. Next, we move to financial statement, which is director are responsible for the preparation of financial statements in every calendar year. It need to be prepared at an interval of not more than 15 months. July audited before their distribution to the members or before the annual general meeting of the company. Financial statement, including consolidated financial statements, should give a true and fair view of financial position of the company at the end of the financial year, financial performance of the company for the financial year. Financial statement is also crucial things for us to keep in touch with our company, and it also helps us plan for the future. So that's all for the financial statement. We proceed to directors report. Directors report need to be attached to financial statement of the company. The directors report may also contain a business review. The details need to be included in the directors report are set out the fee schedule. So from that we can improve our company performance for future by using the director report and our company. Now we already know the three main parts of the requirement for financial reporting. We move on to what is the element of annual report. There are five elements of annual report, which are chairman's statement, audit committee report, statement on interval control, social responsibility, and lastly financial statements. So for the chairman's statement, it states that content not subject to statutory requirements of constraints. Area covered by the statement could include dividends, employees, future prospects, major developments, and performance. So For the audit committee report, also one of the elements of annual report. So usually consists of directors and independent senior management executive who provide assistance to the board of directors. The report will state audit committee's area of responsibility. Next, statement on internal control. The Malaysian Code of Corporate Governance require listed companies to maintain a sound system of internal control to safeguard shareholders' investment and the group assets. Next is Bursa Malaysia Securities Berhad requires listed companies to issue a statement in the annual report about the state of their internal control. Moreover, social responsibility statement is element of annual report. It discloses social responsibility information. Some companies make a statement of their commitment to society at large and the environment. This we can call this voluntary disclosure. Lastly, financial statements. This section of the annual report includes the following. Firstly is the director report, secondly is the auditor report, and lastly financial statement. So auditor report is the responsibility for the preparation of financial statement. For external user rests with the directors. Section 261 of the Companies Act 2016 requires the auditors to sign a statement attesting, firstly, whether in his opinion the company has kept proper accounting records and other books during the period cover those accounts, and secondly, stating whether the financial statements have been audited in accordance with the Act. So that's all from me. Thank you.
As we all know, Bursa Malaysia is the stock exchange of Malaysia. So there are 3 legal requirements in Bursa Malaysia Securities Berhad. Firstly, the listed company has to make additional disclosure regarding to the performance of the company. Secondly, they are required to make preliminary statement of result within 6 months. Lastly, the listed company are to issue half-yearly reports regarding to their performance within the 3 months. Thank you.
Now, I'm going to talk about advantage and disadvantages changes partnership to company from business. Okay, a company is owned by shareholders who profit from the company gains, while partnership is owned by 2 or more people who divide the business profits. Okay, the first advantages is the company has a limited liability for shareholders. In the other words, is liability protection. Second, company or corporation can easily raise funds than the other business by selling stock for their business expenses or cover the debts. 3. For company types of business, taxation rates can be more favorable as the tax can be deducted as a company expenses. Number 4, shareholders can be employed by company. And number 5, easy to transfer ownership by selling shares to another party. Okay, now for the disadvantages. The first, the company can be expensive to establish, to maintain, and wind up. Second, a company is the most complex form of business that involves many paperwork and expenses to set up, but it can offer a big rewards that other form of business do not offer. Number 3, the financial affairs are public. Number 4, profit distributed to shareholders are taxable. And the last one is the company are liable for the company's debt if the director do not meet their legal obligation. So that's all for the advantage and disadvantage change from partnership to company form of business. Thank you.
As for today, we're going to differentiate the financial statement between a company and a partnership. So we're going to discuss about the major difference of the financial statement in the company and in the partnership. So the major differences in financial statement of the partnership and company is that company have more than one capital account, which means that a company, a capital account in a company is based on the number of the partnership and partnership concerned. As for the company, it turns into a shareholder fund which comprise a share capital retained earning, other revenue, and also capital reserve. So there is only one which is shareholder fund. As that in partnership, profit and loss is distributed to the partner's capital account with an agreed ratio, which is if you agree with your partner that you got 1/3 of the company's capital, you will have that in the company that you with the agreed ratio. Meanwhile, your other partners will get 1/3 of the company's capital in their profit and loss. So for the company, it's unlike partnership, which has taxation imposed in individual partners in their capital account. The company imposes the tax as a separate legal entity in each of the partners' account. The third one is that in a partnership, balance sheet shows the balance of the capital amount of each partner specified under owner's equity. But for a company, it's classified as a shareholder funds. And the last one is that besides income statement and the balance sheet, a statement of partner's equity is also prepared to show the changes in equity of each partner since the beginning of the year. But for the company, it's the statement of changes in equity.
As a conclusion, our partnership enterprise will earn more advantages if they change into company. It's such a waste if Ali Abu Ammar did not change their business entity into the company. This is because their company has a lot of potential in various aspects. So that's all from us. Thank you.